Bull markets, they climb a wall of worry as they advance. It's precisely because skepticism keeps investors hesitant. Prices keep rising, even as the crowd finds endless reasons to doubt. Shouldn't inflation concerns, stretched valuations, or geopolitical risks, tariffs and headlines like Warren Buffett selling, stop the rally? But actually, each worry just becomes fuel for the uptrend, rather than a warning of reversal. That skepticism prevents people from positioning early, and it creates the conditions for further gains. It's only when optimism peaks that market tops actually form. Institutions accumulate quietly, while retail investors are often paralyzed by fear. Cycle data continues to show institutional players acting systematically. These funds remain net buyers, tracking the rising trend. Intermediate and long-term cycles keep confirming the uptrend structure. Meanwhile, retail investors react to sentiment and headlines, becoming cautious as prices rise and worries accumulate, but institutions keep buying. It's important to analyze cycle positioning and demand patterns, recognizing that rising cycles offer structural support, regardless of sentiment. Skepticism, it creates fuel for advances, not reversals. When there's widespread skepticism, it means most investors are underpositioned. That creates a natural buying pressure as the trend continues. If everyone already believes and is positioned, who's left to buy? Markets need fresh capital inflow to sustain upward momentum, and skepticism ensures that capital reservoir remains available, with doubters still waiting. Dips become clearer signals, and with each wave, more participants are converted. Tops form when the fear of losing kind of transforms. Fear of missing out starts to take over, and that's a shift that signals even the skeptics. When everyone who had capitulated and was just waiting on the sidelines finally gets positioned, that's when things change. At that point, you're basically removing the fuel source for any extended advance. Then, the top forms, but not because sentiment is overly positive. It's really about the positioning that comes with positive sentiment, meaning the capital is already committed. When the sidelines are exhausted and retail investors finally feel comfortable chasing, that's when you see strength. But it's actually institutions selling and reversing the earlier dynamic. If you're ready to trade with more discipline, clarity, and confidence, and predict the market days or even weeks in advance, then join the Market Turning Points community and visit stockforecasttoday.com.